though I have, concerns about Ethereum in the long run, for example, in January, I'm like, if this breaks over 1400, that's a really bullish sign. And then I kind of watch that Ethereum to Bitcoin ratio, and I kind of monitor that over time. So my overall viewpoint for this run has been that I'm somewhat tactically bullish on Ethereum. And so even in my January Ethereum piece it was otherwise pretty critical, one of the things that I was pretty favorable on was EIP 1559. That was kind of the one thing I singled out as saying I actually think that's pretty elegant for Ethereum to do. And so I think, at least it could be one of those things that's to sell the news event. So once Ethereum 2 is kind of rolled out and that Ethereum gets unlocked, it could ironically, be a sell the news event where now you get out of your position. But at least until then, that's a pretty strong upward price pressure.
So beyond Bitcoin, what are your thoughts on the rest of the crypto ecosystem?
Ethereum is kind of infinitely malleable. It's changing at a far more rapid pace than Bitcoin. Some people consider that a good thing. It is possible that, Ethereum's market cap could rival Bitcoin's in time. One of the differences between Ethereum and Bitcoin is that since inception, Bitcoin's had a very algorithmic monetary policy. They basically said that the new supply of coins is going to get cut in half every 4 years. It hasn't changed, and it's just kind of this sound money kind of principle that it goes through. Ethereum's different because from the beginning, they planned more rapid changes to the protocol. And so the developers put in difficulty bombs. And so basically that's kind of like almost like a kind of a mutually assured destruction that's embedded into Ethereum that forces both miners and developers and users to switch over and do these hard forks every once in a while to kind of keep the development going. Ethereum still has a very large developer network effect. It's got the, up there with Bitcoin, it's the top two overall kind of network effects. It's got the most transaction volume of any blockchain. You have basically a lot of tokens running on top of it. So it's got that kind of network effect. And so basically what you're comparing is a network effect to low switching costs, tons of competitors. The whole point of Ethereum 2.0 is to have a ton of throughput, meaning you shouldn't need a lot of Ethereum to run these smart contracts. And then the question is, so what does Ethereum become worth? And of course, people that like Ethereum, they want to become validators. So they have an incentive to gather Ethereum. That's kind of and they're actually going to lock it up for like 2 years while they do this whole kind of rollout. So I wouldn't be surprised to see Ethereum price do pretty well. We're also seeing that because ETH2 is being rolled out and it's kind of got this unclear deadline for when it's going to happen. It's kind of gotten delays over time. And so with ETH2 staking, basically what people are doing is they're taking their Ethereum tokens and then they're locking them up into this smart contract where they're basically earning a yield. And so basically in Ethereum, the developers have more control, so they can change monetary policy more than they can in Bitcoin. And so there's actually kind of almost like a central bank of Ethereum in the sense that you can actually change monetary policy with less difficulty than you can in Ethereum. And obviously in digital assets, because you were earlier on in the adoption curve, because we don't know the full size, the total addressable market yet, there's a lot more volatility there. We also don't even know their regulatory clarity yet in many countries. And so you have obviously increased volatility, but that still can give you more opportunities to separate price from fundamentals and keep a closer eye on fundamentals than on price. Even though I have, concerns about Ethereum in the long run, for example, in January, I'm like, if this breaks over 1400, that's a really bullish sign. And then I kind of watch that Ethereum to Bitcoin ratio, and I kind of monitor that over time. So my overall viewpoint for this run has been that I'm somewhat tactically bullish on Ethereum. And so even in my January Ethereum piece it was otherwise pretty critical, one of the things that I was pretty favorable on was EIP 1559. That was kind of the one thing I singled out as saying I actually think that's pretty elegant for Ethereum to do. And so I do think that staking and EIP 1559 have been pretty good for the Ethereum protocol, over this past year. And so I think, at least it could be one of those things that's to sell the news event. So once Ethereum 2 is kind of rolled out and that Ethereum gets unlocked, it could ironically, be a sell the news event where now you get out of your position. But at least until then, that's a pretty strong upward price pressure for Ethereum, because you'll have ways to convert liquid to illiquid Ethereum with ETH2 staking, and then in addition you have the EIP 1559. And basically my view was that when you have ETH2 on the horizon and you're locking up ETH into that staking, and then you get EIP 1559, I think that can be pretty bullish for the price in a similar way that a Bitcoin halving can be pretty bullish for the price. I do think that, some of these like highly expensive non-fungible token prices will maybe not be looked too favorably on years from now. I think that there's a lot of interesting potential. I do think that, like we talked about, I think decentralized exchanges in some form are here to stay. I think decentralized liquidity providers are here to stay. The question is how big they get. There's also, if you look at the Lightning Network, I think that there's really interesting developments there. And so that's one of those things where, because the Lightning Network is not really about trading, it hasn't blown up in the same way that DeFi has on Ethereum. And so I think one way I'm looking at Ethereum and some of the altcoins is that I'm kind of treating them in a similar way that I would treat an equity, and it's somewhat different than how I treat Bitcoin, which is as a money. Another thing to keep in mind is that now that Bitcoin and Ethereum and some of these other protocols, the whole space is like big enough to be a macro asset. It's more influenced by these macro headwinds. And so, over 2020, people were getting stimulus checks that they could pile into stocks or cryptos, whereas if those stimulus checks dry up, that's less retail money that can pour into the space. And so I think, you have this period of consolidation where you separate the good projects from the bad projects until you can build a base and have the next bull run. So the market cap has not increased at the same rate as the transaction value has. And so that's kind of my concerns with the overall kind of utility protocols, is that while I'm glad they exist and I think there's interesting development being done there, I haven't seen a compelling case of why I'd want to hold a significant amount of their tokens long term. And so there is certainly a lot of potential there. But at the same side, it's like one of those things where when something's new, it's like you want to apply it to everything, even things that it might not be best applicable for, or you might overstate what percentage of people want to have decentralized apps. So a lot of people like centralization. A lot of people just want things to be easy. They trust their providers, and there's only kind of a small percentage of us that might want to have just more kind of independence in that way. Now that the crypto industry is big enough to be a macro asset. So I'm kind of uncertain in the near term, while my long-term case is still really bullish, specifically for watching the fundamentals over time and the network effects. But from there, obviously some people are real estate experts, some people are equity experts, some people are crypto experts. And so they have to kind of, make sure that they're invested in things that they understand to a reasonable degree. And so I do think that stable coins are here to stay for a while. And I do think that some of these applications are interesting. You also have things like Sphinx Chat, where you can basically, you connect it kind of weeds out spam, and it's a useful way to do micropayments. And so I do think that the whole space is just worth watching. I do think that stable coins, some degree of smart contracts, and some of these improvements over kind of these legacy plumbing systems for finances are a net benefit. Well, so I think smart contracts are a useful tool. Like, I think it's good that some of those platforms exist. I think decentralized exchanges are a good thing, and I think decentralized liquidity providers are a good thing. But overall, I do think that the overall industry has a ton of promise. And like I said, I'm really watching the Strike Global thing to see, to what extent that takes off. I do think it's good that a lot of these programs are kind of poking the existing system and kind of finding ways to do things better. One of the differences between Ethereum and Bitcoin is that since inception, Bitcoin's had a very algorithmic monetary policy, taking their Ethereum tokens and then they're locking them up into this smart contract where they're basically earning a yield. And so I do think that staking and EIP 1559 have been pretty good for the Ethereum protocol, over this past year. I think that can be pretty bullish for the price in a similar way that a Bitcoin halving can be pretty bullish for the price.